Well, folks, inflation is still high off Viagra because it ain't going down no time soon. According to the latest CPI report, inflation is still rising.
Thanks, Captain Obvious.
Yeah, this is something you already know as you stand at the pump putting $30 for half a tank of gas.
Thank you, Mr. President.
Despite that, you are wondering if home prices will drop significantly and if you should buy now or wait. What's up, everybody? I'm Sean McMurray, co-host of BPM RIA Online, and this is Mr. $250 million in real estate transactions, my mentor, my good friend, president and owner of BPM RIA, Anish Dave.
Hey, this is Anish Dave, CEO of BPM RIA. Again, we're making real estate investing simple again.
Inflation rising. Inflation, inflation, inflation. Even the cold shower trick isn't working to bring it down. The overall index climbed 8.2% in September, year over year, which was a slight moderation from 8.3% the previous month. The slight drop was only because Mr. President is trying to pull the old Kansas City shuffle on us before the midterms.
What's a Kansas City shuffle? Kansas City shuffle is when everybody looks right. You go left.
So expect prices to go right back up after. Furthermore, rents are still climbing expeditiously, 7.2% this year so far through September. In an average year, we typically see a 3% increase in rents and housing costs. So, yeah, this is worrisome because the Fed has literally painted a target on bringing housing costs down by increasing the Fed rate. The challenge is, as the Fed raises interest rates, more people are priced out of the market and can only rent, creating more demand in the rental market, theoretically increasing rents and the housing cost reading.
You're in a bit of a conundrum there, my friend.
Anish, I'm sure future homeowners and investors want to know, when will we get inflation under control, and how will the continued rise in inflation affect mortgage rates?
Yeah, Sean, so inflation, the ultimate enemy, right? Inflation, in case you guys don't know, it reduces your purchasing power. So what cost, maybe $10 a year ago might cost about $12. And even though inflation can be a battle, for normal consumers, investors, again, if we're buying these correctly, it's not an issue for us, or if we're using other people's money and leverage.
Mortgage rates rise. High mortgage rates have grabbed our attention like Trump grabs...
Whoa, hold on there.
Not trying to take it there. Although I can't blame people for fixating on the high mortgage rates. Hell, central bankers have raised interest rates 5 times this year and are expected to do so again in November. Unless you're new to this channel, you know that mortgage rates are tied to the Fed rate. So if the Fed rate rises in November, mortgage rates will follow. Monthly mortgage payments for a medium-priced home are already 75% higher than last year, according to Realtor.com. A quick Google search has us at 7.38% for a 30-year fixed-rate mortgage. If the Fed raises in November by the predicted 75 to 100 basis points, this could get ugly real fast and more people are going to be priced out. What is your advice to investors out there who are concerned about high mortgage rates chomping into their profits?
Sean, I'm not very worried about mortgage rates for a couple reasons. If you have enough of a cushion, you're going to be good, meaning there's enough space in there. The second end, if you're using leverage and you're using some of the hard money guys out there, their rates actually have not changed. So you're actually going to be fine because you're using this money for short term. Short-term money, interest rates don't matter as long as you're in and out of these properties pretty quick.
Home prices. With the rise in inflation and the Fed combating inflation by rising the Fed rate and subsequently mortgage rates, with more and more people being priced out of the market, you'd expect home prices to come crashing down like Post Malone falling off stage. Yeah. Yikes. I actually feel bad about that one. Post Malone is one of the really cool ones. Instead, median home prices are 8% higher today than a year ago. Albeit, we have seen declines from highs in June where we recorded median home prices of $413,800. My question, Anish, what is propping up home prices? Secondly, Will we see a substantial drop in home prices this year, next year, if any at all? And last question, what does this say about home appreciation and real estate as a viable investment?
So Sean, I'm not worried about, home prices. They are still going up because affordability, meaning there's still not enough homes for first-time home buyers. So depending on what space you're in, there's still a shortage of inventory. So that's number one. Number two, it really feels like, a crush on the housing market, but the truth is the frenzy's over. Before you had people bidding so much on these houses, 10, 15 bidders on the same house. Now it's back to more normal numbers. Maybe there's 2 or 3 people bidding on a house. And lastly, I'm really bullish on the housing market. I think it's a great industry to be in. People still need homes. Rent prices are still going up. And here in South Florida, people still love the weather down here, the beaches, and guess what? The no state taxes.
Unless we are able to get inflation under control, the Fed will continue to increase rates, which will then drive up mortgage rates, further pricing people out of homes. We could see price declines of 10 to 20% through 2023, but due to housing supply shortages, as Anish has stated, caused by the 2008 fiasco, we are not expecting a crash. For investors, this is a perfect opportunity to purchase homes. We pay cash, so higher mortgage rates don't generally affect us, and even if you take out a loan to fund your deal, remember the 4 strategies we are using to weather the storm. 1, be patient. 2, obtain a funding source. Other people's money is a perfect place to go. Be conservative with your numbers. And 4, apply multiple strategies. Anish, final words.
So again, real estate, without a doubt, is one of the best assets out there. So the key is you need to be in the game. Don't be scared about what you're seeing out there. Again, be patient, buy it correctly, use other people's money, start being creative with your deals, and you'll really start doing really well and crushing it in this market.
And we're out.